Hey, good morning everybody. It's Brian. Hope you're doing well today. It is Friday and it's also non-farm payroll Friday. So pretty interesting day. We're also coming up on a long weekend here in the US. So Monday is not a trading day here. This is a great time. I know I say it every week. This is a great time to figure out your trading plan. If you've been struggling, you haven't been consistent, I would bet pretty serious money that the reason you're not consistent is you don't have a plan that you're following consistently. You either A, don't have a plan at all, or B, don't have a plan you're following consistently. So I'm just going to lead it off with that. This is a great day, great weekend, long weekend to start figuring out your trading plan if you haven't already. Okay, I'm going to leave it there. I'm not going to say any more about it, but that's a big deal. It's a really big deal. You got to have a plan. And we're going to talk about the whys in a minute, but let's go ahead and get to what's happening for the day. So we're going to lead into things with quick, have a look at what news is coming up today, and then we'll pop over to Forex land, see what's happening over there. Really not much. Can't do anything until after news anyway. Then we'll talk about futures. So, all right. So what news is coming up today? Well, I mentioned it's non-farm Friday. First Friday of every month, unless it falls on a holiday, first Friday of every month is non-farm payroll, and this is it's the most widely watched news announcement out there, and pretty much all markets will see a reaction on non-farm payroll. I shouldn't say will. I mean, but yeah, I mean it's a huge day, man. It really is. I mean, it will. there's always something that goes on non-farm payroll. So, today we've got the CAD employment rate, employment change, but then the biggie that's being watched is over here. We've got the U.S. employment rate coming out and the non-farm employment change. Okay, now with news, as I've said before, what the actual number is, whatever this actual number comes out over here, ultimately for us is irrelevant. I mean, yeah, we want to know what the number is. Yeah, we might want to take some action on that. But trying to trade solely based on whatever number pops up in here is a fool's game. I know there are people that love to trade the news, and they make their trades right on the news, and more power to them. But for me, I feel like it's a fool's game because there's so many other factors that are leading into the market beyond what number comes out of this. This is a big number, and it can be a big driver, and it can be a market changer. But it's really how the overall market digests and interprets what that number is and what it might mean for the longer term. Okay, so don't just sit there clicking refresh at 8:30 Eastern, 7:30 Central, planning to click the button at that moment. I mean, you can. I'm not your daddy. You can do whatever you want to do. But it's better, in my opinion, let the news come out. And sure, check the news. Why not? I mean, we're human. We don't know what's going on. But then wait and see what the market thinks of that news. And then trade your plan in the market. And if you have a trading opportunity, great. If you don't have a trading opportunity that comes out of that, that's okay too. We're going to talk about some psychological stuff that's going to pop up today. You're going to see there's a lot of emotion today based on what happened yesterday and what happened on Thursday. Wednesday. So, yeah, have a plan, trade your plan. Don't try to trade the news itself. For Forex, for your Forex traders, on news, like the minute leading up to it, and probably depending on if there's any variance from the expectation, for at least a minute after, we're going to see spreads go pretty crazy. We saw them on Wednesday. We pulled up a Forex chart, and we watched spreads on Wednesday around the ADP unemployment report, which is the precursor to non-farm payroll. And we saw how we went from 2 pips to 18 pips on spreads. With the amount of volatility, I would expect the same or even greater volatility on the spread changing at that point. Why do we care about spreads? Again, for those of you that maybe missed it on Wednesday, The reason we care about the spreads, because that's the difference between your bid and your ask, where you're getting in if you're buying something, and where you're getting in if you're selling something. That's your bid ask spread, right? That spread, just by orders coming out and that spread widening, you can be taken out of the market. You can even be slipped. If you've got like I've said before, if you've got a stop loss point. What a stop loss trade is, by the way. A stop loss trade doesn't say I'm getting out of the trade at this price. The stop loss says, if we're trading, let's say we're looking for the market to go down, for example. And a stop loss would be if we're trading here and the market comes up and it moves through this point, the stop loss is saying, hey, if price gets to this level or starts moving through it, I just want out of the market. So what a stop loss is a pending market order. So now consider this, if all of a sudden, you've got your stop loss here and the spreads widen, all the orders, between here and 50 pips higher all come out of the market. It's blown through. Now the point that you'd be able to be filled is way up here. You're going to get slipped that 50 points, at 50 pips. So that's why we want to be careful around news, especially when we have these volatile times when you've got spreads widening so considerably. We want to avoid that potential of getting slipped in our trades in Forex, right? So anyway, I'm kind of going down a rabbit hole, but it's important to know what the spread is, and because it gives you a lot of information about the health of the market, right? Wider times of wider spreads means that there's less volatility, there's less volume, so the market makers have to, they're going to change where they're willing to do business. During times when you've got a lot of participants in the market, there's a lot of activity going on, spreads are lower. There's less uncertainty about being able to get in and get out because you've got people there, right? It's kind of like going to the auction and there's 300 people, or going to the auction and there's 2. It's kind of the same thing. So anyway, non-farm payroll, big news. Let the news come out, let the market digest it, and then trade it. I would imagine that even the first, part of the regular trading hours, when we get into the indexes here, I would imagine even the first part of the market is going to be at least the first half hour to an hour. It's always pretty choppy. It always is. I don't start looking, like when I've got the indicators set up, and we're watching the market for potential entries. I don't even have those start looking for potential entries until 9:30, 8:30, 9:30, which is 10:30 Eastern, right? I look at it an hour after the market begins because I want to let the market get rid of its initial madness, for lack of a better term. So we'll talk about settings on the indicators later on at another time. So anyway, non-farm payroll, big deal coming up about 20 minutes from now. Could potentially create some chaos in the market. Be aware of that and trade it accordingly. What are we looking to trade? We're looking to trade after non-farm payroll comes out. You can start looking over here. So, give it 5 minutes at least, and start watching for which currencies are being heavily bought and which are being heavily sold, and then we're going to pair those together. It's the same exact marching orders we talk about every morning on Forex. Nothing changes. Just the time of day that we would do it, because we want to wait for the news to finish and then come into the market after news. So nothing else changes. We're still finding, the reason we're looking for a strong currency and a weak currency is because we want to see which currencies that we can pair together. And we want to, as we make that pairing, it needs to be something that has some level of volatility to it and has the ability to continue moving. So, if we come over and then if we find the currencies that are diverging from one another, let's just say, for example, this isn't a trade right now because obviously we have very high impact news in 20 minutes. But let's say after news, we had a situation like this where the CAD was continuing to push to strength and the pound was continuing to push to weakness. So you might go, pound CAD, what's that look like? And then you flip over to your actual chart and you say, okay, well, what's the pound CAD got for me? It's got a typical range of about 130. It's moved 80 on the day so far. Is there opportunity for it to keep moving? Okay, in that case, yeah. Does my volume detail support continued selling on that? Yeah, it does. Okay, then you could say, great, I'm ready to enter a trade. You know, are both markets open right now? You know, if you were faced like we were yesterday, for example, you know, yesterday we were trying to choose between the Euro CAD and the Euro Yen. Both looked pretty good. Ultimately, we decided on the Euro CAD. We decided on the Euro CAD because both markets were open, right? The Euro market was still, you know, going, and the Canadian market was just opening. They're both open. They're being more actively traded than, let's say, the Euro Yen, because the Yen's going to be more active during the Australasian session and the Open of London. It's not going to be as active during the U.S. session. So we chose the Euro CAD. That one pushed into profit pretty much immediately. So you know, you still got to think through it using the other ideas or the other considerations that we talk about here every day. So, you know, don't just blindly follow what's happening with your currency strength. You still want to make sure that there's room left for that currency pairing to move, and that the volume detail supports the direction of the move you want to go. Now, if, let's say, this flips, you know, we've been using that pound CAD as an example again, you know, it's been in a big downward push for the day. Let's say post-news, we start seeing the pound being very heavily bought and the CAD being very heavily sold. So they flipped over. Nothing wrong with playing a reversal, especially if it's at the end of its range. You know, but just take that with a grain of salt. Okay. All right. So moving on over to the futures market. Let's look over here, and we'll pull up the futures market. Big sell-off yesterday. You know, big sell-off. S&P. There's a saying that you may have heard before: up by the stairs, down by the elevator. This was a perfect example of up by the stairs, bloop, down by the elevator. Same over here. I don't know why that. Let's see. Same over here on the Nasdaq. You know, if we look back, we're up by the stairs, and then bloop, down by the elevator. You know, basically on most of these, we erased 5 or 6 days worth of gains in a day. There's a lot of emotion in the market right now about this. You know, I said it yesterday. That I felt like we're going to see some movement, and we did. And I said that you're going to have people calling out that they've been calling this reversal, blah, 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 blah. Challenge is, the folks that are saying that have probably been calling that reversal for the last 4 months. It just now happened to happen. They were wrong for like 1,500 points. Less than that, really. It wasn't at 2,000, but you get my drift. I mean, they were wrong for, you know, about 600 points. So careful with the calling the tops and calling the bottoms. An emotion. So after a big day like that, there's two sets of emotions. One would be the people sitting there staring at the chart, going, "Oh man, I really missed that move." And they start doing the math on what they could have made if they had been in a trade, you know. And then you've got those today that are looking at that, and they're just certain that, you know, it's going to move like that again today, and it might. Which direction though? Maybe it moves straight up today. I don't know. You know, maybe it continues to sell off. I don't know. No one really knows what's going to happen next. But you've got the emotion of, I missed the trade, here's what I could have made. And you've got the other emotion of, wow, I just had that huge move, it's gotta reverse. So now you've got folks jumping out in front of this bus that's, you know, moving in one direction. They're jumping out in front of that bus because they felt like they missed out, and they want to jump in, you know, to catch the next ride up. Those are emotion-driven trades. Unless you're trading it because it's come to a key level and you want to trade off of a key level. Anything else, if you didn't have a plan in place for this already, you might want to step back and just go, what triggers are causing me to make these decisions today? You know, I didn't have a plan yesterday, and this morning I'm just kind of formulating a plan on the fly. is that emotion driven? And if you answer yes, if it's an emotion driven plan, step back. Just don't trade. You don't have to trade every day. Step back, don't trade, do what you need to do, and create a plan. All right. So let's talk about what we could potentially do on the S&P today. So the S&P, big sell-off today. We're coming into news. Non-farm payroll is going to come up here in about 15 minutes. And then, we could potentially after that, after the live session begins, the regular trading hours begin, we could start looking for trading opportunities. Now, 34.50. It's been a big number. 34.45 is where the number is where the line is here on the 4 hour. It was significant level of resistance for us for a while. Broke through it. Never even came back to retest it. Yesterday came down right to that level and has stopped. And 34.50. It's showing to be a solid support level. Support, 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 support. Now, the thing with these support levels is, and same with resistance, is the more they're tested, typically the weaker they get. Again, we use that analogy quite a bit of, looking at support or resistance like, support is the floor, resistance is the ceiling. For bouncing on a trampoline, we keep hitting our head on the ceiling, it's going to weaken and we're eventually going to break through, and that becomes our new level of support. And if we jump on that long enough, we'll probably break back through again. Or if we jump and we keep hitting our head on the next ceiling, we're going to break through that. So, the more we keep hitting our head on something, or jumping on something. In this case, it can weaken it. So, 34.50 is our decision point. 34.45, 34.50 is our big decision point here. After news, if price is broken down below this and closes below it, this could potentially be a spot where it might look to go further short. For right now, the 4 hour bias is long. 30-minute bias is obviously very, very short. With that said, what would we do for potential trading opportunities? Well, if we're trading in the direction of the bias and we're looking for the 4 hour to be long and the 30-minute to be in agreement with the 4 hour, we don't have any kind of a trading opportunity. This right here says, Brian, sit on your hands. Sit on your hands. Wait for the market to actually find what its direction is going to be, and don't take any action until the market has some direction. That's a great idea. So I'm going to do that. We're going to sit on our hands and we're not going to do anything right here, right? That'd be the best. If you're trading a plan and your plan says, hey, if your biases are mixed, don't trade, then you don't trade. You just leave it and you wait. And maybe price breaks back above after non-farm payroll. I don't know what it's going to do. It could go straight down another, 100 points or more. Could it break back above? Yeah, it could. It can go either direction. No one actually knows. No one knows. The pressure from yesterday would be, down, but we all know that the markets can do what the markets can do. So, you would wait for it to break back above, and if this pushes back above here, and the 30-minute now is in agreement with the 4 hour bias, then you can start looking for long opportunities. If it continues down and later on today, tomorrow at some point, our 4 hour bias finally crosses and the bias becomes short, then we'll start looking for short opportunities. But for right now, this tells us just stay away. Don't get caught up in all the emotion that's around this move right here. Don't get caught up in this emotion. Just stay away from it. All right. Crude. What's happening on crude? Short bias on the 4 hour. So the 4 hour is short. The 30-minute bias is technically still short as well. So remember, it's a definitive thing. There is no subjectivity to our market bias. If the red line is above the green line, we're looking for short opportunities. If the green line is above the red line, we're looking for long opportunities. Right now, this is showing us short on both of these. Now, if this stays up here and closes a bit higher, we might see the green cross over the red before we get into the time that we actually look at trades. If that happens, then we don't look at anything. If the biases are mixed, we don't trade. Right now, they're both technically still short, so when it comes to our trading time, we'll check this again. If they're both still in agreement, then we would look for short opportunities, which would be watching for that pullback to occur, and then trailing our entry point at the bottom of those previously closed candles as they trail up, and then playing the breakout as it moves back in the direction of our bias. Gold, gold here Same thing, we've got a short directional bias. So 4 hour is short, 30 minute is short as well. That's telling us to look for short trading opportunities. A couple things we can do there. One would be exactly what we just said, which is if you're looking to go short, we want to see the market making higher lows and higher highs and then trail our entry point off the bottom of those previously closed higher lows. Or you could just simply look for breakout areas and my brain's all mixed up. 1940 over here is a pretty key level for us. 1939. If we break down below 1939, that could be the spot to look for continued short opportunities if you're just looking to do a regular breakout. But I would say stick to the plan of exactly what we've been trading, which is we want to trade in the direction of the market bias only when we've got agreement. And if you don't have agreement, you don't really have a clear bias. And at that point, you sit on your hands. And after a big day like yesterday, it's a great day to sit on your hands. Right? You don't have to push the button, and certainly don't let emotion drive your trades. Again, speaking from experience, you get emotional about a position, you hang on for it for too long, and because you're probably not, if you're trading with emotion, you're probably not using stops, or you're widening your stop because you have this fear of being wrong. If you're trading with emotion, more of that creeps into what you're doing, and this desire to be right really kind of comes to the top. There's all these other things that subconsciously keep coming to the forefront. If you're trading with emotion, it's a bad deal. That's how accounts get hurt or even blown out. So please, I know I sound like a broken record. I do. Brian, you say the same thing every day. I do. Have a plan. Stick to your plan. Having that plan is what's going to make you successful, because it gives you that consistency in the marketplace. It helps you avoid certain situations, just like we talked about in the recap from yesterday. Having a plan allowed us to avoid a lot of the madness in the marketplace yesterday and find things that were actually moving according to plan and take potential opportunities there. Have a plan. That's what's going to create your success over time. If you don't have a plan, use the weekend, create a plan. All right? I'll see you on Tuesday, because Monday's a trading holiday. All right?